Okay, good afternoon or good morning or good evening, everyone, depending on what part of the world you're dialing in from. And a very warm welcome to today's webinar on how to become proficient or professional or pro, depending on how you define it, with Fibonacci analysis. So in today's webinar, I'm going to give you a ground up understanding of how Fibonacci numbers and ratios are constructed, how you apply them on charts, how you can use them to find entries, and how you can use them to find targets. We'll do some theory at the front end, and then we'll look at some practical charts. Before we go any further, very standard risk disclaimer. Keep in mind that everything we're going to cover today is for educational purposes only. We're not giving investment advice, trading signals, trading recommendations, and so on. So very standard kind of risk disclaimer. And always keep in mind that trading financial instruments, leverage products, etc., can result in losses as well as gains. So a little bit about myself. My name is Huzafa Hamid. I am one of the senior analysts with dailyforex.com. I'm a Forex and futures trader. I'm primarily Forex, and within that umbrella, I'm primarily trading the majors. So the 6 or 7 majors, the usual suspects: Euro USD, pound dollar, dollar yen, Aussie dollar, New Zealand dollar, dollar Swiss. I think that covers it. Those are the 6 or 7 majors that I trade. Trade the odd futures contract, E-mini, S&P, crude oil, natural gas, and occasionally the Russell, which is a US equities index. The most important thing I can tell you about myself is that I use technical analysis for my decision making. So now that term, technical analysis, means different things to different people. What it means to me is that I use the price chart. I don't put many indicators on there. I put Fibonacci analysis on there, but that's really about it. I draw my own support and resistance levels. But principally, I don't use any economic analysis. So I do look at the economic calendar. I want to know when news announcements are coming out. Those typically will drive certain trends or will add liquidity to certain Forex pairs, but I don't actually analyze the numbers. I'm not looking at interest rates and saying, okay, well, the interest rate was here and the expectation was it was going to be at this number. How will that change the price chart? That's not what I'm doing. I'm looking at the price chart itself to drive my decision making, to drive where I should enter a trade and where I should exit. And I'm based in Toronto, Canada. One of the things I like about working with Daily Forex is we have a very global audience. One of the members on the webinar today, Zabulon, he said he's from Kenya. My parents are from Kenya. They're born and raised there, and they now live in England, where I was originally from. My grandparents are from Kenya. I'm interested to know if you just want to quickly type in the chat window the city or the state or the country or the province you're in. I'm really interested to know where our audience is from. So I'll just keep stump. I'll keep quiet for about 1 or 2 minutes, 60 seconds or so, and let me know where you're from. Hi, Raha from South Africa. Zabulon, what city are you in? Gerrards Cross, England. Nice to meet you, Michael. I'm from Croydon, if you know Croydon. Hi, Johan. I think it's Johan. It's pronounced from Nigeria. Mohammed from Oman. Nice to meet you. Nice to meet the individual from Durban. I don't know how to pronounce your name. I'm sorry. Joel from South Africa. Nice to meet you, Joel. We have I think Daily Forest can tell me, actually, we have a big South African contingent that follow us. Howard from South Africa again. Maybe it's the time of day. Maybe it's the time zone that we're doing these webinars that we attract a lot of South African and English people. I think South Africa and England are in the same time zone, actually, because they're in the same line of longitude. Okay, great to meet you. Thanks for telling me. Thanks for humoring me. I'm always looking out for somebody in my hood, in Toronto or nearby, to have a coffee with, but sadly nobody in my city's dialed in today. Okay, next time maybe. We'll see. All right. So become a Fibonacci Pro. As I mentioned at the beginning, we're going to do a bit of theory from the ground up, look at how Fibonacci numbers are constructed, and then we're going to look to see how you apply them on charts. So everyone's heard of Fibonacci, and everyone knows the tale of it's most famously discovered around the 12th, 13th century by an Italian mathematician, Leonardo Fibonacci. And it's also discovered around the same time in parts of South Asia and in India. So it's a centuries-old series, and it's a number series, firstly. So first and foremost, it's a series of numbers, and it starts with 0 and 1. And the idea is that every preceding number, every consecutive number, is the product or the addition of the previous two. So if the first two numbers are 0 and 1, you simply add those two together to get 1 again. Then you add 1 and 1 to get 2, 2 and 1 to get 3. You add 2 and 3 to get 5, 3 and 5 to get 8, 5 and 8 to get 13, and then 13 and 8 to get 21, 34, 21 plus 34 is 55, 34 plus 55 is 89, and so on. 144 is the next number, 233 is the next number, and then it just continues. So that's how the Fibonacci series is built up from ground up, and it continues unto infinity. There's no end to the Fibonacci numbers. Okay, so what makes them special? Why? Okay, so far we haven't really looked at why does the Fibonacci series exist in that format. Now, if you take consecutive Fibonacci numbers, so in this case we're just using 55 and 89 randomly, you divide one by the other. So you take the smaller number and you divide it by the larger number. So 55 divided by 89, it gives you 61.8% or 0.618, depending on how you want to express it. Now that's true whichever consecutive numbers that you pick. So I picked 55 and 89. If you pick the next two, 144 divided by 233, it also gives you 61.8%. And you can try this yourselves if you've never done this before with a calculator. If you go further along the line, the bigger number is 987 divided by 1597, again, 61.8%. Keep going down. Same thing, 4,184 divided by 6,765 equals 0.618 or 61.8%. So that's where that 61.8% comes from. And there are some interesting mathematical properties to that number. So if you take a line from 0 to 100 and you mark out the 61.8% level, it's about 2/3 of the way, and you take the first part of it, the first length of it, we'll call that length A, and you take the entire length of it, obviously because we've marked it out, A divided by B is going to be 61.8%. That's obvious so far because we've marked it out at 61.8% down the segment of the line. Now, if you take, so A divided by 61.8%, you take the same line, and now you take the largest segment divided by the smaller segment, so B divided by A, that's also 61.8%. So the proportions of this line, when you use that Fibonacci ratio, 61.8%, the proportions of that line remain static. And then you could dig into it further and you start seeing the Fibonacci numbers appearing in nature. So in how plants grow and how the number of petals on leaves, you'll see various different types of flowers with 13 petals or 21 petals or 34, 55, 89. They grow in Fibonacci sequences, the way rabbits breed, for example, and you can start seeing the Fibonacci ratios appear in large structures, planetary bodies, galaxies, in small atomic structures, in life, etc. So importantly, Fibonacci, the Fibonacci number series, it wasn't so much as invented, it was much more discovered. That's why it was discovered in two separate parts of the world several hundred years ago, because it's something that you find appears in natural systems, and that's probably why it appears frequently in the financial markets, and that's why it's become very popular in the financial market. So the first Fibonacci number that we found through that number series is 61.8%. or 0.618%. And that's known as the golden ratio. So that's kind of the key fib level. Now, when we got this to arrive at the 61.8%, we took two consecutive numbers. Now let's take two adjacent numbers, or two numbers where they're separated by another number. So 18. So rather than taking 89 divided by 144, 89 divided by 1 across 233, and that gives you 38.2%. Now, I'm not going to run through all the different examples, but if you did this anywhere on the number lines, if you did 2584 divided by 67865, again, you still get that 38.2%. You can try this as well. It's pretty easy to do with a calculator or spreadsheet. So that's the second fib number. You go 2 across now, and that gives you 23.6%. And that's your another Fibonacci ratio. And again, if you just try 34 divided by 144, or say 1597 divided by 6765, 2 across, or 3 across rather, that'll give you again the same proportion, 23.6%. So these are kind of proportions that happen inherently within the line. So we found our first few Fibonacci numbers: 23.6%, 38.2%, and 61.8%, that kind of key number, the golden ratio. Now, other numbers, like another number that's often used by traders is the 50% level. Now, this is not a true Fibonacci number, but it's a very popular number. Psychologically, it's important. Traders, human beings, we recognize halfway marks very easily. And that's often known as a halfway back level, when the market or the price retraces halfway back. And the other couple of levels that are popular as well are 78.6% and 88.6%. Now, they're derived by square rooting, firstly, the golden ratio. You take 61.8%, or if you take 0.618%, or sorry, 0.618, you square root it on your calculator, you'll get the 0.786. You square root it again, you'll get 0.886, or 88.6%. if you express it as a percentage. Now, there are a bunch of Fibonacci numbers. You can even square again, or square root 88.6%, you get 9.942 or 94.2%. There's a bunch of Fibonacci numbers. And the issue with using all of them at once is you get a ton of lines in your charts. It's very confusing. So I'm now going to talk to you about what I use personally in my own trading to find trades using the Fibonacci levels. So the first thing I do is I look for these 50 to 61.8%. When price falls between those two levels, I look at that as an entry zone. Secondly, to get a target, I look at minus 23.6%, and we'll look to see how you find that on the chart. And then I look at minus 6.18 or minus 61.8% as my second target. So if you have an uptrend, let's say, like this, you can mark your fib levels. So we're assuming the price is going to continue going up. So you put the 0 at the top, the 100 at the bottom of the low. So low to high or high to low. The price has started retracing. So I'm wanting the price to come down to somewhere in this level, like this, and then bounce off it to go up. So I'll be using that. When the price comes down here, I'll be looking to enter the market around between that 50 to 61.8% level as an entry zone. Now, the same thing works inversely for a short trade or a downtrend. Price is trending down. There's a high now from low to high. The low is at 0. The high is at 100%. I'm expecting the price to retrace. I want it to retrace all the way up to between that 50 to 61.8% level, and then for it to bounce back and to move down. So that's pretty straightforward. So far, we're going to look to see how you apply that on real charts. Now, let's look at those targets. So let's go back to the uptrend. I've just marked, for clarity, I've just marked the 50 to 61.8% level as this gray box here. So we can kind of see it where it would apply. And now the two targets, minus 23.6%. So 23.6% above the 0 level, and minus 61.8%. Those would be my two price targets if I'd entered around here on that 50 to 61.8% level. So there's target 1 and target 2, and it'll be exactly the same with downtrends. Now, one of the things I want to say, though, is you really want to use Fibonacci in context. You don't just put it on the chart. So you're asking yourself, okay, what is the overall direction of the chart? What's the price context of a chart? It doesn't make sense to put Fibonacci levels in the middle of a trading range. Preferably, you want to be trying to enter a trend and using the Fib levels to help you find that trend. Or if the prices come to a previous support or resistance, that's a great time to start looking at Fib levels. So I'll talk a little bit more about that context in a second. And you can use Fibonacci levels, and you should be using Fibonacci levels with multiple time frames. So you don't just enter in on one time frame. You want to look at different time frames to get confluence for the direction of the price. Always remember, when you're trading multiple time frames, the higher time frame will always dominate the lower time frames. So we'll see an example of that right now. So this is let's get into some actual trades. This is a long-term chart of the Euro USD, and this is a weekly chart. So each bar, or each candle rather, is a weekly candle. So this is going back now. You got a good, I'd say, a couple of hundred bars on this. This is going back now to 2012, 2013 to date. This is a long-term chart, almost a decade's worth of data there. Now, I've marked, you can see that the price had started to fall around here, around July 2014, and made a low. So low to high, sorry, high to low even. Now, when I draw my fib lines, on my Fibonacci tool, I remove the 0 and the 100. I just like to remove it for cleanliness, because you can see the top and the bottom. So there's your 50% level, and there's your 61.8% level. So you can see the price retraced back up to that 61.8% level and stalled and reversed and started to move back down. And it's come back for what I would call a re-entry. So again, it's come back up here, and now it's stalled. It didn't really get as deep in the level as it did previously. I think institutions personally saw the previous resistance level. It's a key level. It's around that kind of fib level, the Fibonacci zone, and sellers stepped in much quicker this time round. So remember what I said earlier, the higher time frame dominates the lower time frame. So recently in 2020, you've got this uptrend moving into the Fibonacci zone, or the entry zone. So, but the higher overall zone resistance level is now dominating that short-term uptrend. It's not even that short-term. It's happened over an entire year. But relative to the 7 or 8 years that this zone took to build up, the zone held, the long-term zone held, and the relatively short-term zone will started to push back down. Okay, so I'm starting to see this as a potential short play. So now, this is the weekly chart. We want to go down so that you can see the initial resistance, and now you can see the pushback the second time round. So now this is the same chart, except now I'm going all the way down to the 4 hour. I've skipped the daily. I've gone straight down to the 4 hour. And I'm just going to go flip back and forth just so there's clarity. This is the 50% level here on the long-term chart. Go down to the 4 hour. I've marked that same level in gray, just so it's there in the background. And you can see, it really did flitter around that level for some weeks or some months. So now I'm seeing it starting to trend down. My first fib level handle, I wouldn't have caught this trade. It was too early, but I drew it on the chart so you get an idea. It almost hits the 50% level, almost about 2-3 pips away. Moves swiftly down, goes straight to target 1, bounces cleanly off target 2. You find when you get a good clean 50% bounce, or a level bounce within that 61.8% level, these targets are then very respected. One of them will usually are respected quite well. So 61.8%, almost to the pip, bounces against it. Now I'm going to bring my fib handle. There's the second bounce. bring my fib handle down now to the second leg of this downtrend. And now I'm seeing a potential, there's a couple of re-entry spots. It really respected the second 50% level to 61.8% zone. And these are my future targets. So these are current charts I'm looking at. You got a target down here, potential 1 and 2 targets. So I think these targets will be quite easily hit. So I'm bearish Euro USD based on my Fibonacci analysis. So I'm going to go back and just recap what I read. Mohammed, you have a question? Please ask me. This is the 50%, 61.8% level on the weekly. And you can see the bounces against on the week level. Zoom into the 4-hour first leg down. I wouldn't have caught this trade. It was too quick. I would have, because it's still kind of in the middle of that range, but now it's starting to form a good downtrend. And when I see the second leg and a good 50% bounce, there you go. There's a setting the second time when it pushes right up to that level and then starts retreating away. There's an easy second entry. Okay. Mohammed, yes. Yeah, the recording will be sent. So after this, you'll get a summary email of the presentation. And I believe there's a recording, but you'll certainly get a summary email and all the charts. Okay, so I'm seeing something similar on the pound dollar. So this is the pound dollar GBP USD and 4-hour chart. So the price had been trending up. Now I haven't scrolled back on this chart just to keep it simple, but the price has been trending up for weeks, in fact months, and suddenly the trend just collapsed. So now I'm looking at a short play. The trend had been overextended for some time. It collapsed. Lots of sellers pushing in, and we tried to push up. It made a resistance level. It was really saying it doesn't want to be up anymore. Now, I'm going to talk a little bit about why I drew my fib level here instead of right at the high. The reason I drew it here is because this is really where the fall started. So up here, it went sideways a bit, but the actual fall, the precipitous fall, really started at this level here. So that's where I drew my fib handle down to the low here. 2 really great entries here. So if you didn't take the first one, the second one, when it came back up and it rejected that level, there's a clean entry. These are your 2 future targets. Again, this is the pound dollar on the 4-hour chart. Dollar yen. This is an interesting trade. I felt for a while that the downtrend had been overextended, so I was looking to get into long. And here you can see the pound. The dollar yen. You can see it had been going sideways. Made a leg up, moved down, hit the 50% level. Target 1, it got to target 1, a little bit of a stall. Target 2 got there, and then it retraced before moving back up. So that's the dollar. That's the dollar yen. So this is one of my favorite trades to look at when it comes to fib analysis, and that is because it was a good counter trend. So this is the dollar CAD, again 4-hour chart. It made a resistance level here. I was expecting the price to stall. Oops, I'm just going to okay. So I was expecting the price to stall and move back up, and this is another key level that I'd marked out here from this support. But what happened is that there was a breakout candle here, this big red candle that told me, okay, the bears are taking over. This trend is done. You see that big bearish candle. I didn't expect it to retrace and push back up again. And it's key level 2. And this is my fib levels on this particular chart. So top to bottom, here it goes to the 50% level and then swiftly moves down straight into target 2 down there before moving sideways. So this is a really interesting trade for me because I really thought I was bullish on this trade until I saw that that bearish candle, which essentially changed my view. Because what was happening, go back, the price was squeezing here. I thought it was into a triangle. I thought it would push. I knew it would have to break out. price has been trending up, makes a resistance. It would have to break out either way. I was expecting an upside breakout. In fact, it was a downside breakout. I wouldn't have caught it immediately. Price kind of went sideways. And then there's a couple of things that helped me get in the trade. First of all, this is a previous support. So it gets tested as a resistance. There you go, like that. And then I got to confirm it with a fib level, 61.8% level. Got my second entry there, went straight down to target 2, just didn't look back before moving sideways. So as I mentioned earlier, when these levels get respected, you find one of these targets really will also be respected as well. If you want, so these webinars, they're 30 minutes long, they're quick. I can't believe when I'm delivering them how quickly 30 minutes goes. But if you want some more information on fib retracement levels, go to fxacademy.com. There's an entire Fibonacci lesson there. So fxacademy.com, fxacademy.com, excuse me. If you click Learn to Trade, scroll down, this Fibonacci retracement level. There's an entire set of lessons there. I believe there are 4 or 5 videos and a bunch of Q&As and some written material there. You get really kind of a deep dive into fib. And the other thing that you may want to check out, one of the brokers that we work with at Daily Forex is FXTM. They have a bunch of strategy managers. You can ask them what strategies they're using. They actually manage money. They develop signals, etc. So you can follow them if you like. So that's just fxtm.com. Just go to Become Investor, top performing strategy managers. And you can just go to that site and learn a little bit more. Some final thoughts before wrapping up. If the chart isn't clear, stay away. Not every chart's going to give you clear levels. It's going to be messy. You might be in the range. Honestly, about 5 out of 7 times, 4 out of 5 times, somewhere around there, I'm not finding clear levels. I'm having to wait, go to different time frames, and then try to find where my trades are. Always mind your risk. Always have a stop loss. When you're looking at fib levels, I like to keep my stop losses somewhere below the 61.8% level, but always trade with a stop loss. Never trade without one, and manage how much you put into each trade. None of this matters if you don't have proper risk management. If you're interested in getting in touch with me, go to Josefa at Daily Forex. Email. Don't go to. It's not a website. It's an email address. Email me, Josefa at dailyforex.com. Feel free if you've got any questions. Ask away. I'm going to post a couple of links in the chat window. That's the FX Academy link, and that's the FXTM link as well, if you're interested in those 2 resources. The FX Academy stuff I find really useful. I send people there when they ask me about Fibonacci. Honestly, I send them there. I say, watch these lessons first, do your homework. It'll kind of get you up to speed and make sure you've got all the key organizing principles covered. All right, it's approaching 3:30, I believe. Let's have a look at the time. It is 3:29. So just almost 3:30. Have a fabulous afternoon or evening. And thank you very much for joining me today. Thanks a lot. Take care. Bye now.